Welcome on in for today's video where I'd like to talk about what currently is my favorite bond market mutual fund, and it's from the Vanguard. And basically what I'm going to do is be giving an overview of what you get with this particular mutual fund and just give all the specifics and why I really like this particular bond market mutual fund. So the ticker symbol is VBTLX, and it's called the Vanguard Total Bond Market Index Fund Admiral shares. Now, if you're in a situation where you don't want to expose yourself to as much market risk, then a bond market mutual fund is definitely something to take a look at, especially one that's well diversified like this. And that's a big reason why I like this one. So it's in general, they try to target around 30% in corporate bonds and around 70% in U.S. government bonds. And these are bonds of all maturities, short-term, intermediate, and long-term. So it's well diversified in terms of the maturity of the bonds, as well as some in the corporate pool and then also some in the U.S. government bonds as well. And some other things that I really like about it, it's minimum investment relatively low at around $3,000. And also, you're going to have a hard time finding an expense ratio that's lower than 0.05 percentage points. And that is pretty much with any mutual fund that you take a look at, it's going to be a hard situation to find one that's lower than 0.05%. And then also there's no upfront fees, at least at this point with this mutual fund for the bond market index. They don't have those upfront fees in this particular one. So that's also something I really like about it. And just looking at historical performance since its inception in 2001, it's returned over 4% per year. So obviously not going to do quite as well as if you have exposure to the stock market, because with higher risk can come higher rewards, but it's a safer investment. And basically what you're trying to do when you're investing in a well-diversified bond market portfolio is to outperform a bit of what inflation is going to do to strip value away from your nest egg over the course of time. And what this fund has shown in particular, that it can return a bit more than what the inflation rate is. And what we see, their current composition of what they're invested in, it's a little over 63% in the U.S. government. And then you can see in these different bonds, the AAA is going to be the safest bond, and then it goes down from there. But investment quality bonds that we're looking at, and AAA at 3.9%, and then AA at 3.5, A at 11.2, and then BAA at 18 percentage points. You can see that this fund's total net assets are quite high. It's around $241 billion, and it's diversified among almost 9,000 different bonds. So like I said, a well-diversified situation. I love getting into these mutual funds that have a bunch of diversification in themselves inherently. And another thing that I really like about this particular mutual fund is that it pays out at the end of each month. So we can just take a look at the dividend history, and they pay out, as you can see, right towards the end of the month, September 30th, August 30th, July 31st. You can see here that it's paying out the end of the month, and then what they're getting per share, and then what the reinvestment price was. So you can see that this distribution yield annualized, we're getting between about 2 to 3%. And again, it's nice getting that payout at the end of each month, especially if you're in retirement age, you have a large nest egg, and you just want to live off something that's a relatively lower risk investment that you can get in a bond market and then live off of those distributions. This is something to perhaps take a look at. I really love this particular bond market if you're looking for something safer to invest in than the general stock market. And again, you're going to want to look for things that have this lower expense ratio. You're going to have a hard time finding something lower than 0.05 percentage points, because the lower the expense ratio you can get, the better you're going to be off in the long run, because that's less that's being taken out of your nest egg to manage the fund, and that just can have a compounding interest over time and not eating away as much at that nest egg. So again, guys, I just wanted to run you through this particular mutual fund that's looking at the bond market index from the Vanguard here, the ticker symbol VBTLX. And you can likely find this with whichever investment brokerage firm that you are with if you're interested in investing in something like a bond market index fund. So I appreciate you guys stopping on in. Consider subscribing to my YouTube channel, and hope to see you guys back here for future videos.